Welcome back to the channel and this week's update on the SPY. This week we can see we broke down through many of the technical levels that we pointed out in last week's market update. First, looking at a weekly chart, we can see that we have a bearish engulfing bar taking out the lows of the previous week's trading range and closing near the lows of 2 weeks ago. Remember, in this candle notation, solid bars means the session closed lower than it opened, and likewise hollow bars mean the market closed above where it initially opened. Looking to a daily time frame, selling picked up going into the week's end, and we closed at the low, which typically has follow through on the Monday opening, but we will see. From a technical standpoint, there was a trend line supporting this market anchored to last year's October lows. Previously this year, we tested this support and bounced. You can see we cleanly broke support and closed below the trend line on Friday's close. In addition, we closed below the 200-day simple moving average shown here in red. With Friday's close, the 5, 21, and 50 exponential moving averages are all stacked bearish again, and the price action is clearly below all three of them. We are nearing the lower bounds of the DK trend channel, which is coming in at 420 and denoted by this lime green line. The DK trend has switched from a short-term buy signal shown in light blue to sell shown in light orange seen on the candle color. The RSI is now sub 40 on the daily time frame, so we could be due for a bounce during this next week, so be prepared to pick up some positive delta if that happens. Personally, I will be selling puts to get long in this case because IVR and VIX is finally elevated over 20 again. This chart shows how many consecutive days the VIX has been below 20. This chart is updated through this past Tuesday's session of trading. Clearly you can see this recent bout of suppressed VIX has ended with Friday's VIX close of 21.7. Though seasonally speaking, this is a time of the year when VIX has a relative top and then fades into the new year, leading to the Santa Claus rally. If VIX begins to drop, you can expect a rather violent reversal move to the upside. If we continue to sell off, look for resistance around 412 on the SPY. That lines up with a previous zone of congestion we were trapped in for months earlier this year, as well as the quarterly 5 exponential moving average. Also to note this week, the COT data is showing less short large speculators and retail is still net bullish. This indicates there may not be the fuel to provide a short squeeze similar to the ones we've seen earlier this year when the large speculators were overlay bearish. Also to note, the US 30-year and US 10-year bonds are yielding 5%. You can buy a bond and hold it until maturation, and each year you will receive 5% on your principal. If your benchmark is 10% a year, this is a fantastic way to get a risk-free return of half of your desired return. The price of the bond will fluctuate while you hold it, but your coupon payments will always be 5%, and when the bond matures you will receive your principal you originally invested. Thanks for tuning in today.